Hey guys, good morning, or good afternoon actually. Um, Look, so I've been talking um, about a couple of different things recently, right? And I know we shared some of the automation kind of prop firm type stuff, how to kind of, win at this and so on. And I know for some of you guys, you've kind of followed along. I think, overall, I'm not getting enough kind of questions. So, I'm hoping you guys are kind of taking it in, and that's the reason for the kind of the lack of questions. But, this is definitely not for signals. This is more for just to kind of to teach you, right? There's nothing more than I want, nothing more than Paul wants is to, to give you something that you can do for yourself, right? I just wanted to explain in kind of, as short as I can really in the grand scheme of things, but I think this is really important. So if obviously you've joined and you've been with us for a long time, for us, it's a bigger picture play, right? Now, the bigger picture clearly plays into smaller pictures, and you can get to a point where you can almost take what you want from the market, right? If you want to spend all day in front of the computer, be my guest, right? And some days, sometimes I enjoy it, right? I enjoy, kind of chatting on Discord. It kind of takes you away from other things, and it kind of allows you I guess kind of interaction with the outside world, right? I live in the middle of nowhere, and everyone around me speaks French. So in the grand scheme of things, it's kind of pleasant. I guess the point being, if you're trying to trade for a living, you're trying to pass these prop firm challenges, you're trying to, even if you've passed one or two and you're trying to scale your account, as I showed the other day, right? The last trade I took on the, 3 minute, 5 minute time frame, it could have been easily a 9% trade. I could have scaled in and it would have been something like 13.9% or 14% trade. Right? That's one trade passing a challenge, just one trade 10%, that's 14 grand on $100,000 account, right? It's easily doable, which means you don't even have to trade that much in the grand scheme of things. You need to think of this in terms of what you want out of this, right? And this is kind of where it becomes personal, kind of all around. Now, when you're looking at the bias, and this goes back to what we've talked about Elliott and Wyckoff and everything else, right? Is these things fit together. They're not different, right? They're very, very similar. When you have these, when you have these kind of moves, right? If I draw, something like this there, right? That becomes, your Wyckoff accumulation. That accumulation becomes the master pattern, and these things kind of happen, over and over again, right? If we draw an Elliott and we go, just exaggerated, we move down, probably up, down, etc. Right? These moves become obvious, right? So if we imagine this was our three, this was our four, up for a five, right? Regardless of what happened on it, it doesn't matter, right? The point being is, this is how these things actually come together. When you start seeing gaps and you start adding different kind of terms or different techniques, the techniques kind of fit together, right? So, clear gap kind of sitting in there, right? We've got, gaps kind of sitting in there. You can see these gaps from a million miles away. So there's no real need of indicators and so on. When you look at something like stochastic, RSI, MACD, all of these things, right? Every single one of them is actually lagging. So again, you don't really need in terms of an indicator. When I was working with Peter Hammer to ultimately put together the footprint zigzags and the other indicators that we actually put together, the oscillator, the momentum, the CVD, a lot of these things are pretty obvious, right? Some of them not so obvious based on things like, calculating the CVD for a certain level. Right? But if you were to draw something like this, right? Let's just go from that swing high down to the swing low, right? So let's just assume it's somewhere there, right? So what you can see kind of straight away is you can see where there's a lack of volume, right? Kind of lack of volume, even there technically lack of volume, right? But what you can also see is if I put a bigger kind of cluster in, we've got quite a large cluster there, quite a large cluster there, large cluster there, bigger cluster there, right? Bigger cluster there, and obviously massive cluster down low in comparison. Right? So what you can do is you can start to take this and say, well, where do you think these footprints are going to start to, to appear? These footprints are probably likely to be, and I'm just doing this very rough, right? So if I make this a bit more obvious, something like that, right? This is going to be very rough in terms of the kind of current levels that you see. Right? You're going to get a lot of these footprints, mapped out similar to this, right? So a lot of the, where they have, and that's not going to be accurate. This is just me showing you kind of the concept, right? So where these things then start to kind of fit together is if you can work out, what we are looking for, kind of why. This is where the bias comes in, the Elliott wave, bigger picture. You're going to understand what we're actually trying to do. If we've had the first move, down, we've got this kind of redistribution, right? Which means, this could actually be deemed as an accumulation. But when we start looking bigger cycle, if this was obviously the 0 to the 1, and this is a 1 down to a 2, how much fuel do you think, right? So when you look at, say, the zigzags, right, on the CBD, the zigzags are going to give you almost the equations, right? They're going to give you how much we've got. You can see this with the COT data, right? So you can see hopefully now a lot of these things kind of come together, right? When we look for the liquidity, whether it's a fair value gap or an imbalance or a buy before you sell or an auction area, right? It kind of almost doesn't matter, right? The point being, there's two things that the market is always kind of looking for. Right? So when I talk about it being an algorithm or it's kind of seeking kind of liquidity overall, you get what's known as outside and inside liquidity, right? So this is the kind of the fundamentals of it. When you look at a zigzag pattern, right, or we look at an Elliott wave pattern, so if we assume something like this, right, as created potentially, let's just assume that this is the first A, right, of a move down. This is potentially the first B, right, and then we get some kind of C, which could be kind of anywhere, right, from these levels. What you tend to find is you're going to have outside liquidity, right? You're going to have outside liquidity, and then you're going to have nested outside liquidity, right? So the first move down nested would be something like this, right? So if I do these as say yellows, right? Then you're going to have obviously the back swing being outside. Now, obviously, from here, as you start to come down, you're going to get even smaller nested levels, right? So there's going to be your first one. So if I do these in, say, blue, right? You're going to come back and you're going to have a swing there in blue. We're going to come out and we're going to have a swing there in blue, right? We're going to come up and we're going to have these swings first in blue, right? Then we've started now to get these, okay? So I've basically gone and done, massive green, medium yellow, right? Smaller term blue. What we're looking for is the market seeking the liquidity from moves that it had before. So if you can visualize this move here, we would have had a lot of stop losses in this zone. Right? We would have had a lot of people buying the dip. When I said back in August 21, on this particular post, when I went back and said, where was it to scroll, this one. When I said that the price was likely to go 3, 4, 5, 65k or just above, right? This is all the buyers, 65k. Then we're likely to see 40k again very quick. Let me just put this into some kind of perspective. So I've just talked about outside liquidity. I haven't mentioned inside liquidity at all. The reason for it is we basically took this level here. I'm going to paint this pink. And we took every single buyer that had orders there. And we took them and screwed them over. There's a lot of retail going, oh, I've listened to plan B and the price is off to 135k, right? That's the momentum for the fear of the drop. Right? The reason then for that is a lot of people that might have actually sold this as a position, these kind of spiky moves would have potentially stopped out anyone that would have been, well, I'm anti-Bitcoin and I'm, I'm taking this to zero. Right? So the fuel becomes aggressive, right? And there's kind of your liquidity pot. Right? Now what you have is internal liquidity, right? And this is where the fair value gaps, the imbalances, the buy before you sells, the order blocks, whatever you badge them as, right? These various things are slightly different. Some of them are low volume, some of them are high volume, right? The market is going to be seeking them out, right? So if you come along and you draw all these different aspects of liquidity, what you're going to find is a couple of times the price will do something really, really interesting. You'll actually see double bottoms, for example, right? Or triple bottoms, double bottoms, right? The price then will rally and it'll seek that outside liquidity. But what we've gone and done is we've created this kind of internal liquidity kind of twice, right? Now, if we were to go and draw, master patterns from them, you'll find, where's the area of interest? Well, the area of interest was there, right? We've come down, or technically we've come in and we've spiked into liquidity. We've created a double bottom, right? And then we faked out retail trades by, let's buy the dip and go long, right? Now, at this particular point, what we've gone and done, we get rid of some of these, right? What we've gone and done in a move like that is we've created technically only nested triple top type high look, right? We've wicked up and above and fueled down fast. We've come back and retested the bottom of that move, right, to go again. Now what we're doing is we're creating similar kind of moves where we've got technically a double top and a double bottom forming there, right, before we've kind of rallied on out. The only issue is this is a much bigger time frame. All we've done is we've gone all the way across and created this technical double top. We've grabbed nested outside liquidity because I've marked this up obviously smaller time frame, right? Which gives us then fuel for the drop. The next piece of outside liquidity is ultimately down underneath. Look, right, here's your next zone. And then we've got the small liquidity right here. When you start looking for outside liquidity, right, they're obvious. Inside liquidity, we've got this being the gap. We've got this being an auction area, right? We've got this one being the last kind of, sell before you buy, right? So there's another candle in there, just about. We've got this one being a gap. Yeah. We've got this down here, and we've got the whole sideways action. Probably come down lower. We've got more gaps sitting in there. We've got more gaps underneath there, right? We've got consolidation ranges and we've got a larger consolidation as a whole, right? So all of this is all kind of food for a move up that hasn't actually been grabbed properly yet. It doesn't have to come all the way down, right? Because obviously this is where you can measure the CVD, you can measure bigger picture, right? And you can start to say, well, if this was our kind of move, right? If we were to do a 618, right? Not a 1618, a 618 type of move there, right? We come back down and we create technically a double bottom lock, right? So if we then create a double bottom, that also gives us momentum to the upside to go and break some highs. Now, all of these things are all logic, right? They're all things that you can kind of, split and work on. When you start then thinking of how these markets operate, right, the way that they operate, I'm just going to get rid of all these a second, right? Now, come back. Right. When you think of what an Elliott wave move does, right, this is where the psychology and everything else kind of fits in, right? So if I start, let's just start off with a down move. Right? We've got an A, we've got a B, we've got a C. Right? You can obviously run your fib extensions and you see, your 1, 6, 1, 8 and so on, right? But deep 2, pull back 3, 4, 5, right? Just to kind of play the example, right? This is where now, for me, some of these things become, more than obvious, right? You're going to see levels like this. You're going to see double bottoms like this. Once you see something there and there, fuel for the move down. Now we've got this and this, fuel for the move up. What we've then done is we've broken through, we've grabbed liquidity, and we've come back to test liquidity, creating a double bottom to go again. Right? The issue now is when you start looking kind of internally, you can start to see that the moves that happen inside each of these moves also marry up with the moves that are inside the moves. Right? So if I was to draw a circle, or say a line across this like there, I'd put this in green. What you'll find is as we kind of rally through, we might see a 1, might see a 2, might see a 3, might see a 4, might see a 5. Right? We've used this level here, 1 time, 2 times, 3 times. What happens then is the price goes in A, B, C, use it again, right? This now, look, has created the same kind of double bottom to go again. The market is always seeking inside and outside liquidity, right? Almost like footsteps, left, right, left, right, left, right, left, right. When you've got your larger scale bias, right, it's easy to understand, where we're going to, where we're heading, why we're heading there. Right? You don't need to go into, much more detail than that. But in the bigger picture, if you can kind of see what I've just shown you there on a monthly time frame, come down to a weekly time frame, some of these levels become more than obvious because we had this here, we had the price up, and we made new kind of levels in terms of that outside liquidity. We come back technically to the inside liquidity, which means we want to go back to the outside there, right? We then come down, come back. So now we're making this inside liquidity. Come back, we test that inside liquidity, right? Now we want to make outside liquidity. Done, right? Now what we have is obviously at the moment, we've got this not creating technically any double bottom. We've now come back, we've taken the low, we've come out, we've got this kind of outside liquidity, right? We're unlikely to want additional outside liquidity, right? Now, this is where the spring event comes in, right? Because you could get that outside and then you go, right? But in the grand scheme of things, if we've now had technically outside here, there's nothing stopping us coming back, consolidating, and then seeking new outside liquidity at this level, right? The only issue being, and this is where it gets kind of interesting, much, much bigger picture, is if you were to say we do come all the way back down, then we get a nice big rally seeking the nested liquidity. There's our 1. Then we come back down for a 2, probably the top of the box in this area. Then we can break through with conviction for a 3. Then we come back and probably test the outside of this, or sorry, the underside of this across there. Then we go up for a 4, 5, right? 4, 5. So the point being is, overall, it's not overly complicated or complex, right? You don't need to think much more about it than that. You can see these things then with the volume profile. You can see it with the volume across the bottom of the chart. You can see these levels and kind of why they work, right? So anyway, I'm going to finish like that for today, right? This was just kind of putting it together. I've talked about this and it was kind of fresh in my head, and I thought it's worthwhile just recording this quick video for you subscribers only, right? So I'll stick this in interesting lessons, and again, just let me know if there's any questions, any kind of thoughts, and I think just give this a bit of a practice, guys. I'll see you on the next stream. Cheers.